Now, the other side of the coin to price is time. And I think that everyone looking for these moves has to pay attention to time. There's a symmetry in the market that you will see over and over again. And when I talk to people, I stress, don't take my word on this. Look at it yourself and convince yourself that that symmetry is there. Because then you'll be able to go in the market, you'll be able to take trades, you'll have confidence in what you're doing, and you won't just be guessing. I've made all the mistakes over the years that everybody watching this video has made. And believe me, I know what it's like to get into a losing streak and have everything just go wrong. I've also been able to put together some good winning streaks, and I know how satisfying that can be because you out-traded a lot of sophisticated people, including floor traders who do this for a living day in and day out. And remember, they're playing a different game than you're playing, very often at least. The scalpers are just trying to get the edge on you. They're trying to buy it at the bid. They're trying to sell it at the offer. Now, you can't do that off the floor. You can try. Occasionally, you'll be able to buy the bid, and occasionally, you'll be able to sell the offer. But most of the time, you won. And that's why I try not to use limit orders. I tend just to use market orders. The beauty of market orders is that you know right away whether you're filled or not. And that's what I need to know doing this type of trading. And I also want to stress that you have to leave your ego outside the door when you do this type of trading, or any type of trading for that matter. You're going to be wrong a certain percentage of the time, and you shouldn't take it personally. It's just something that happens when you trade. I was talking to someone about a week ago, and in the phone conversation, the notion of losses came up, and he said to me, you mean you still have losing days? And I said, of course I do. All traders have losing days. The ones who don't have losing days aren't telling you the truth. So losses are just a part of trading. It's a process. If you do the right thing enough, you'll come out ahead. If you do the wrong things over and over, you'll lose. And ironically, you can often win the most when you do the wrong things, and that's because you're not really aware of the risk. This is why new traders often have winning streaks, because they're not really aware of how risky it is, and they take chances and it works out. But if they do that enough, they're going to end up on the losing end of things. Not long ago, I was trading with a client of mine in Florida, and he was short, and the market screamed up against him, and he didn't get out. So I'm watching him, and I'm thinking, well, what's he going to do? And the market is really screaming against him, and I would have been out a long time ago in this move, and he didn't get out, and what happened was it came back for him. It came back to like break even. He gets out and he turns to me and says, see, I knew that would happen. And I said, if you keep doing that, you're not going to be able to be a trader because you're going to lose your money, because very often it doesn't come back. And there have been many illustrations recently in this market where it goes higher and never comes back. So remember that losses are just a part of trading. Here on page 19, I'm illustrating a rally into the close and how pure it is in the time. It's essentially one direction up, and on the 5-minute bars it went for 1 hour and 20 minutes. On page 20, I've got a 1 hour and 20-minute decline. And again, don't take my word on this. Go to the charts, look at them, and convince yourself that these rallies and declines exist, and very often they exist at certain times during the day. Taking East Coast time, you want to be in there for the morning rally or decline from the open till 11, 11:30, even into 12 noon. 12 noon to 2 p.m., it tends to be choppy. After 2 p.m. East Coast time, you get the afternoon trend. Now what will happen is some days it will come in right at 2 o'clock East Coast time. Other days it won't come in to 3:15. You don't want to be too early, but you don't want to be too late. And it's difficult to give a hard and fast rule a win will be the key time today. But if you have a ballpark idea of when to look for these things, you'll do much better. If you're trading the lunch hour, on the other hand, you'll get what you think is a rally and it won't be one. And you'll end up getting whipsawed. You'll buy it, it'll go down, and you'll say, okay, it's going lower, I'll sell it, and then it'll go up. So be careful about when you trade. Also, you have to understand the demoralizing aspect of losses. If you come into the day looking for these 2 times a day and you're focused and disciplined, you're more apt to get them. If you come into the day thinking there's opportunities all day long and I'll just get in and trade, and you tend to have a few losers, you'll be demoralized by the time the good trade comes along. So I try to keep my powder dry. I try to look for the spot, and I try to go for it. And when that time comes to get in the market, you got to do it. Because if you second guess yourself and say, all my rules tell me to get in, but I'm going to watch it a little longer, you know what will happen. It'll start to rally, it'll go your way, and then if you chase it, you'll end up buying the top. In the reverse, when it's going down, you'll end up selling the low. All times are not created equal during the day. There are good times, there are bad times, and you have to have the discipline to go in there in the best times. But these rallies and declines exist, and they exist almost every day. Occasionally there'll be a day when you really don't want to trade. For instance, take the Friday after Thanksgiving. Take any 3-day holiday the day before. The day before the 4th of July holiday tends to be quiet. Any time during the Christmas holidays are bad times typically to trade. Not just because the volatility is lessened, but the liquidity dries up. Last New Year's Eve, I just happened to be looking at the market, and I hadn't traded in like 10 days because we were in the Christmas holidays. So we go into the close, and in the final minute, the market goes up 300 points. Well, there was no liquidity there. Somebody had an MOC order to buy at MOC. Well, there was a seller, all right, but he was 300 higher. And that's what they made this guy pay up to get out. Now, that's the pitfall of trading in an illiquid market, not just when the S&Ps are illiquid, but any other market which doesn't lend itself to good day trading. A lot of the New York markets like orange juice, markets that don't move enough, for instance, oats, some of the meats, the bellies are tough to trade these days. There's not a lot of liquidity in there. Getting back to the workbook here on page 22, again, I've identified on a 1-minute bar basis what the legs look like. A leg down, a pop up, the second leg down. On the counter trends, when the profits are being taken on the first leg, we're going to, as we get into this, we're going to be able to see there's specific points they can go to, namely the 618 retracement, where it, quote, should stop. And very often it will violate that 618 point by one minute bar and then come back down. Now, if it doesn't, if it violates it and stays up in a market that's going down, then you're in trouble. Then you have to reverse, and then you have to get out quickly. But right now we're talking about what should happen, what the basic pattern looks like, how to identify it, and then later we can talk about how do I trade this market when it doesn't do what it's supposed to do. And very often the S&P market will change character and do this. Now, early in this year, it only wanted to go up. And so if you started selling, as I tried to do a few times, I found out that I was on the losing side because it would always scream higher. There'd be no follow-through. At the time now when we're shooting this video, there is follow-through. I've never seen the market this good before. We're getting 400-point legs, so we're getting 800 points on the 2 legs. And they're pure, they're in one direction. It's doing exactly what it's supposed to do in terms of the time and price symmetry. So that's what you want in order to make steady and consistent profits.